Now, there are some very big changes coming to the Affordable Care Act in 2026, which you definitely want to be aware of, because the result of these changes, premiums are going up, rules are tightening, and if you don't know about these rules, then you take on the risk of losing your eligibility for a tax credit. You might be caught off guard by the higher premiums. And in this video, I'm just going to be able to distill down the most important rules, and I will specifically be going over the 4 most important rules that are going to be implemented next year, or at least 4 biggest changes for you to be aware of so you don't get caught off guard. I'm Sebastian. I talk to people about their health insurance every day. I've seen what works, and I've also seen what can cost people big time. Now, the first change is that the enhanced subsidies are set to expire at the end of 2025, which means that your premiums on average could increase by 75% and even double for some people. And to get into what is going on here, so basically back in 2020 and 2021 during COVID, a lot of people were losing their jobs. And what else do you also lose when you lose your job typically? Your health insurance, right? So a lot of Americans, they were losing their health insurance, which means that they had to find an alternative to their employer coverage, which the most common alternative to employer coverage is the health insurance marketplace, right? Healthcare.gov or some sort of state-based exchange. And through these exchanges, a lot of families and individuals were able to qualify for a tax credit to help lower their monthly premium. And again, the government saw that a lot of people were switching to the health insurance marketplace because of how many people were losing their jobs. So the government decided to enhance the tax credits, which primarily did 2 things. Now, the first thing that it did is it increased the number of tax credits that people got. So plans became more affordable. In fact, I spoke to a family the other day, and it was a household size of 4, and they make well over $200,000, and they still qualified for it was $800 a month in a tax credit. And that just goes to show how powerful these tax credits can really be. So that's the first thing the enhanced subsidies did. It increased the number of tax credits available. And number 2, it made tax credits available to those making over 400% of the federal poverty level, right? So basically, middle to higher income, mainly higher income families and individuals could now qualify for a tax credit when they previously weren't able to. So basically what the enhanced subsidies did is it just made tax credits available to more people, and it increased the number of tax credits that people got. Now, here's the thing. These enhanced subsidies are set to expire at the end of 2025, right? And Congress, right, they're not renewing them. It's pretty much official. In 2026, we're not going to have expanded tax credits anymore, which means that your premiums on average will increase by 75% and even double for some people, which that is a pretty big deal. That's going to lead a lot of people to go uninsured. They may decrease the coverage. They may go from a gold plan down to a bronze plan just so they can afford the coverage. And they might also look for other coverage alternatives to the health insurance marketplace, which I will be posting more videos about other alternatives to the health insurance marketplace that can be more affordable. So make sure to subscribe to stay informed about that. Now, the next change, or it was a proposed change, which was pushed back to 2027, or the end of 2026, I should specify. But it was that the open enrollment period was going to last from November 1st through December 15th, rather than November 1st through January 15th. Right, so that was a proposed change, which is being pushed back to the end of 2026. So as of now, you still have from November 1st through January 15th to enroll into plans for the following year. Now, the next change, if you're not aware of this one, then you take on the risk of losing your eligibility for a tax credit. And it's that the tax filing deadlines are being tightened. And what I mean by that is that when you apply for the marketplace, you have to file your taxes, right? And if you had a plan, let's just say in 2024, then you would have up until 2025, 2026 to actually file your taxes and reconcile your premium tax credit for 2024. Well, now that rule is changing. Instead of 2 years to file your taxes and reconcile your tax credits, you actually have 1 year. This is a pretty big deal for people that delay filing their taxes or even just skip a year entirely, right? If you skip a year, then you will lose your eligibility for a tax credit. And again, you only have 1 year to actually file your taxes and reconcile your premium tax credits. Now, the next change is that there is going to be a stricter income verification process, right? If the IRS doesn't have any sort of tax data on you or something just doesn't add up, as of right now, you can simply attest that your income is 50,000, 60,000, or whatever you're projecting for that year, right? But now the marketplace is going to require hard proof that your income is actually what you're saying it's going to be, right? You might have to provide pay stubs, W-2s, 1099s, other forms of proof that actually show what your income is, right? There's no more just self-attestation. You have to be able to show hard proof of what your income will actually be. So again, just get your documents in order. You don't want to lose your tax credit just because you're not able to provide proof of your income. Now, those are the most important changes coming in 2026. There's a lot more to it, but I really just wanted to make a very simple video telling you what the changes will be for next year. More changes are coming, and you're going to want to stay informed. So make sure to subscribe so you can stay up to date with the changes coming next year.